Hi everyone. Welcome to Level Up channel. When I search for interesting stocks in YouTube, I very often find videos talking about Microsoft, Apple, Amazon, Google, NIO, Coca-Cola, etc. I personally don't need YouTube to get me these names. For a stock to be interesting for me, it needs to meet some criteria. First, the stock must pay a dividend and the dividend yield must be above 2% at least. Many YouTubers depict the huge potential of Google stock, but for me, it is far from being my number one stock of interest as Google doesn't pay any dividends. I am not willing to hold a stock hoping that one day the stock price gets higher and I could sell it at that price and make a bargain. I don't build up my strategy on hope. Of course, I have some stocks that pay less than 2%, like Lowe's for example. But this is really exceptional and it is related to my second criteria. Indeed, the stock has to have an interesting dividend growth. By interesting I mean a double-digit dividend growth. Despite Lowe's low dividend yield, the company often raises its dividends by 18% every year. With these kind of raises, I would get very subsequent yield on cost in 5, 10 or 20 years. Third, the dividends of the company must be reliable. I put aside companies that cut their dividends from time to time or reduce them hugely. The payout ratio is a good indicator of the capability of the company to pay its shareholders, and I often look closely at this ratio. In today's video I present a list of 5 stocks no one talks about, stocks that look solid, pay nice dividends and are capable of raising them considerably in the future years. So let's get into it. Stock 1, Tractor Supply. Tractor Supply Company is an American retailer of products for the rural lifestyle. The company sells a range of goods, including items for horses, livestock, pets, and small animals that are required for their health, care, growth, and containment, as well as hardware, truck, towing, and tool products, as well as seasonal items like gifts, toys, and power tools, as well as work and leisure clothing and footwear. Dividend yield, 1.80%. Dividend safety, 68. Dividend growth, 29% per year in the last 5 years. With this rate, you would get a yield on cost of 21% in 10 years. Dividend growth streak, 12 years. According to analysts, the price target of the company could reach $273 per share, which represents a 19% upside potential. Stock 2, Old Dominion. Old Dominion Freight Line conducts business as a less-than-truckload motor carrier in the United States and North America. It offers national, interstate, and regional LTL services, as well as accelerated travel. The business also provides a number of value-added services, including supply chain consulting, freight brokerage, and container drayage. As of December 31, 2022, it owned and operated 255 service centers, 44 fleet maintenance facilities, 11,274 tractors, 31,252 line-haul trailers, and 14,315 pickup and delivery trailers. The headquarters of Old Dominion Freight Line are in Thomasville, North Carolina, where it was established in 1934. Dividend yield, 0.45%. Dividend safety, 81. Dividend growth, 35% per year in the last 5 years. With this rate, you would get a yield on cost of 9% in 10 years. Dividend growth streak, 5 years. According to analysts, the price target of the company could reach $425 per share, which represents a 20% upside potential. Stock 3, Cain Foods. The company was established in 1957. Jackson, Mississippi serves as the company's headquarters. The business sells premium shell eggs under the Egg Best, Land O'Lakes, Farmhouse, and 4-grain brand names, as well as under its own private labels. These include nutritionally improved, cage-free, organic, and brown eggs. It offers its goods to a variety of clients, especially in the southwestern, southeastern, midwestern, and mid-Atlantic regions of the United States, including national and regional grocery store chains, club shops, food service distributors, and consumers of egg products. Dividend yield, 5.36%. Dividend safety, 43. Dividend growth, 24% per year in the last 5 years. Dividend growth streak, 7 years. According to analysts, the current share price is somewhat overvalued. You might wait for a correction if you would like to grab some shares. Stock 4, EssilorLuxottica. Ophthalmic lenses, frames and sunglasses are designed, produced and distributed by EssilorLuxottica Société Anonyme across North America, Europe, Latin America, Asia, Oceania, and Africa. Wholesale, retail, lenses, and optical instruments, equipment and sunglasses and readers are its 5 business segments. The wholesale division produces and distributes high-end and athletic eyeglasses at wholesale prices. Luxury and athletic eyewear are sold at retail. The segment for lenses and small equipment includes Varilux progressive lenses, Crizal anti-reflective, anti-smudge, and anti-static lenses, Transitions photochromic lenses, Eisen lenses for computer, tablet, smartphone, and other connected device users, Spirio polarized sun lenses, Nikon and Kodak corrective lens brands, and others. The sunglasses and readers segment provides non-prescription sunglasses and reading glasses under the Foster Grant, Gargoyles, Magnavision, Corinne McCormack, Monkey, Riders Eyewear, and Solar Shield brands, Reebok, Steve Madden, Betsy Johnson, Nine West, Dockers, French Connection, Iron Man, Rawlings, Body Glove, Panama Jack, Marvel, and Disney, Bolin, Molson, Kenna, and ProSun brands, and Mujiao Shinojo brands. It has a network of 490 edging mounting and prescription laboratories. In October 2018, the business changed its name from Essilor International Société Anonyme to Essilor Luxottica Société Anonyme. Dividend yield, 1.98%. Dividend safety, 70. Dividend growth, 10.4% per year in the last 5 years. Dividend growth streak, 15 years. Analyst Louise Singlehurst of research firm Goldman Sachs considers the stock attractive and recommends it for purchase. The target price continues to be located at $197. In his latest research note, analyst Luca Solca confirms his positive recommendation. The broker Bernstein was already long on the buy side. The target price is not modified at $197. Essilor Luxottica has recently confirmed its implantation in China. This will open a huge market for the company. Analysts estimate that by conquering China, Essilor Luxottica would enhance its revenues by double in the next 5 years. Before getting to the last stock, please push the like button to help grow the channel. It takes me a lot of energy to do the research and try to come up with a good content. I would really appreciate it. For European-based investors, I put in the description of this video the link to Trade Republic Broker. It has very low fees, offer a wide range of stocks and ETFs. You'll get a bonus when you subscribe. Now, let's go on. Stock 5, Advance Auto Parts. The company was founded in 1929 and is based in Raleigh, North Carolina. Advance Auto Parts Incorporated provides automotive replacement parts, accessories, batteries, and maintenance items for domestic and imported cars, sport utility vehicles, vans, and light and heavy-duty trucks. As of January 2, 2021, it operated 4,806 stores and 170 branches in the United States, Puerto Rico, the U.S. Virgin Islands, and Canada, and served 1,277 independently owned CarQuest branded stores in Mexico, Grand Cayman, the Bahamas, Turks and Caicos, and the British Virgin Islands. Dividend yield, 4.33%. Dividend safety, 89. Dividend growth, 68% per year in the last 5 years. If you would like to get a safer approach of this rate, you can consider the 10 years dividend growth of 30%, which is still amazing. Dividend growth streak, 15 years. According to analysts, the price target of the company could reach $180 per share, which represents a 30% upside potential. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.